Good morning, everybody, and welcome to this webinar. This is the second in our series of 7 webinars, which we're producing about success in a changing landscape and in relation to cash management, and also how you can actually beat the recession. Before we actually start, we have to read out our disclaimer, which is the following presentation is produced for general guidance only, and professional advice should always be sought before any transaction is undertaken. Individual circumstances can vary, and therefore no responsibility can be accepted by Harts Limited or any of their affiliates for any action taken or any decision made to refrain from action by attendees of this presentation. Okay, that's the formal bit out of the way. This, as I say, is the second in our series of 7 webinars. They're meant to be interactive, so anybody can just jump in at any one time. The first one was on strategy and planning, which is now up on YouTube. And this session will appear up on YouTube later on this afternoon. And if you want to search for previous sessions, then have a look at our YouTube channel, which if you go to YouTube, search for Harts Limited, with limited spelt in full, then a copy of this recording, along with all our other recordings in relation to this series and other stuff in relation to government support are up there. Feel free to dive in. And we'll go on to more about what's coming up a little bit later on. A little bit of an update, first of all, as well. We've seen in the papers about Rishi Sunak saying there is going to be some tax rises. This is all leaks at the moment. Nothing has actually come out, but it'll be interesting to see what comes out in his budget, whether he is going to put a restriction on personal pension relief and reducing that for higher rate taxpayers down from 40 to 30 or even 20%. And also looking at corporation tax and increasing that from 19 to 24%. That's a big jump. That will raise about 12 billion a year. Is that really going to touch the sides with what amount of money we've actually spent? Who knows? We've also had the Eat Out to Help Out scheme, which has generated 65 million meals. That's probably somewhere in the region of £600 million. I doubt that's going to be extended at all. And also there's talk about capital gains tax being increased to match the personal income tax rates. Again, that can be quite significant for those that have got assets and gains tied up in assets. Also, as an update, the self-employed grant, the second part of the self-employed grant is out there to claim. So if you've been adversely affected by COVID-19 since the 14th of July, what you need to do is get your claim in now, all part of your cash management, to generate as much cash and keep as much cash as you can. So in today's session, we're going to look at cash is king. We're going to have a look at cash flow, cost cutting, and our COVID support plan. So in relation to cash management, do you know your numbers? Do you understand how your cash is in relation to your numbers? Do you know your customers? Do you happen to know which customers are generating the most cash? Do you have profitability by product or service? Do you know which products or which services you're offering are generating the cash? And do you know your break-even analysis? Do you know at what point you're going to actually break even in relation to cash? Also, have a look at using the government money wisely. Plenty of our clients have taken up the bounce back loans, and they are putting this money onto one side, and if they actually need to use it at a later date, then they will use that. If not, they can just repay it and have it put aside for 12 months, repay it, no penalties. At least they've got the backup of that there as well. So it's vital to hold on to as much cash as you possibly can during this period of recession, because you're going to need that cash at some point. Cash is often overlooked due to a number of these issues. First of all, staff issues. You've got people at the moment who are on furlough. They want to come back from furlough. You're putting them back on part-time. You're making redundancies. You might have short-time working. You've got people who don't want to come back from furlough, want to stay on furlough for whatever reason. So you can have all these whole host of staff issues which are going to create problems for you and therefore take your mind off your cash management. You're going to be looking after your customers, and you want to make sure all your customers are happy. You want to keep your customers happy as much as possible during this period of COVID-19 and during this period of recession. You might have sales targets that you've got to consider, and therefore you've got to meet. So again, it's a question of making sure that you're meeting these sales targets, you're busy with that, and you'll overlook the cash. It may be that you're selling stuff just to meet sales targets and not generating the cash that comes with it, because you might be selling goods or services at a discount. You might have a marketing plan and you're so wrapped up in your marketing plan you're not considering how that will affect your cash management. Your systems might need overhauling. You may well have systems in place which are outdated and you're looking to overhaul them. I know we've got clients putting in new computer systems at the moment. That's taking away the focus from cash. Legislation, we've all had to see how we've changed our offices and structure our offices in relation to COVID-19. Again, takes your mind off cash management. Recruitment, you might have got rid of too many people and now you want to recruit people as well. So does cash come at the bottom of this list for you? Have a look at your processes to see where cash is tied up. And we're going to come on to that in a bit more detail. Is it possible for you to improve these, and can you change the way you work? Great book here up on screen called Who Moved My Cheese? It's all in relation to change. And it's a very easy read. You can get it off Amazon for a few pounds. It'll take you about an hour to read. It's well worth having a read and giving out to some staff, because it's all about not being afraid of change and being adaptive to it and embracing the change that we're all having to go through at the moment. Do you do a cash flow forecast? Is it possible for you to get one prepared quite easily? It's well worth doing cash flow forecasts, and consider doing one on a monthly basis as a minimum, looking forward for 12 months. But you can also do cash flow forecasts on a daily basis and update them regularly. It gives you the opportunity, and we'll see this a little bit later on, to look forward and see what holes you've actually got in your cash position. Have a look at the profit. Here's an example. Everything looks fantastic. So for instance, we've got a sales in the month, it's 50, it could be 5,000, it could be 50,000, it could be 5, whatever it is. We're just taking this as an example. So we've got sales of 50, you've got your direct costs of 15, you've got wages of 15, you've got overheads of 10. So you've got total cost there of 40, giving you a profit of 10. You've got tax put aside for that of 2, leaving you a net profit position of 8. Great, we've got 8 grand over a quarter, 3 8s, £24,000. Fantastic, we're generating £24,000 worth of cash. Unfortunately, that's not necessarily the case. You can see here your bank balance has only gone from 55 to 60,000. So where's the money gone? It can be tied up in a whole host of things. So we're looking at stock of 15,000. You can have stock tied, your cash is actually tied up in the stock. You've got money owing to you at the end of that period. Maybe £105,000 is tied up in money owing to you. You've not actually brought the cash in. You've made the sale, but you've not actually collected the cash yet. Your overdraft position is still stuck at 60,000. You've got VAT due of 30,000. You've got corporation tax due of 6. But you can see that overall here, you've got £24,000 worth, but it's tied up in all these other areas. So what you've got to look at is, how are we actually generating the cash, rather than looking at a profit position. Because profit and cash are not the same sort of thing. So where can the cash be stuck? Debtor timings. How quickly do you actually collect your debt? So at the moment, you're collecting your debts maybe on 60 days, maybe on 30 days. Is there an opportunity here to actually collect the debt on a shorter basis, on a quicker basis? So it may well be that you pay for your utility bills on a monthly basis. So are you in a position, and whether you use that service or not, are you in a position to be able to collect that money in and collect the cash in on a monthly basis? So have a look at your debtor timings. Can you improve it? If you're currently giving 60 days now, is it possible to actually collect the money in on 30 days? Is there an opportunity to give a prompt payment discount in there as well? So you might want to offer 1 or 2% prompt payment discount to encourage people to pay you sooner. Again, is it possible to collect money up front? Is it possible to put clients on direct debit or standing order so you've got regular money coming in? This is all going to help your cash. Have a look at your stock holding as well and just see whether you're actually converting your cash quickly enough. It may well be, we've talked about Brexit, that term, we've hardly heard about Brexit over the last few months with everything else that's been going on, and a lot of companies stocked up for Brexit. So it may well be that we're going to sit around and just say, well, actually, we need to hold the stock for Brexit. We don't need that stock anymore. So let's just look at ways of actually getting rid of that stock. And that way we can actually hold back on the stock, that we actually convert some of the stock that we've got into cash. Is it possible to convert some of the work in progress that we've got? So rather than actually billing work in progress, let's actually make sure that we can actually convert this work in progress into cash. Let's have a look at supplier payment terms as well. So if we can actually make sure that our supplier payment terms are taking as long as much credit as we can, let's try and practice what we preach. So with the supplier payments, let's turn around and say, well, actually, we want credit from you. We might not be getting any credits at the moment. Let's get 30 days or extend those terms to 45 days or even 60 days. But again, let's have a look at this and make sure we can actually convert our money into cash. Have a look at creditor timings as well. Make sure we can get as much from there as possible. Here's an example of cash cycle timings. So for instance, it may well be that you buy your raw materials on day one and you've got to pay for your cash up front. It can well then take 30 days for your work in progress to be actually, your job to actually be produced, your product to be actually produced. And then you raise your invoice after that. So you're now up to 60 days and you get paid in 60 days. So it's taken you from day one, where you've actually had to buy your raw materials, to day 120 to actually be paid. That's 4 months of time between actually starting the job and completing the job. So what we need to do is reduce these. So from day one, let's negotiate better terms with our suppliers. So instead of paying for our goods up front, let's pay for the goods within 30 days. And at least then let's get some credit from our suppliers. Have a look at our work in progress. And is there any way we can reduce our work in progress by productivity efficiencies? Can we improve the way we actually do our work? So instead of it taking 30 days, we can get it done in maybe 20 days. That's going to reduce the amount of time you spend with that without having to send a sales invoice out. Raise your sales invoices promptly. Is it possible to ask for cash up front in relation to some of the work that you're doing or some of the products that you're supplying? And therefore reduce the amount of time it takes for you to actually collect that money in. And then look at debtors. You're offering 60 days credit terms, let's reduce that to 30 days. So what we're effectively doing is we're actually squeezing this whole cycle here from 120 days, maybe down to 60 days, so that you can actually engage your cash and get your cash in far quicker than you used to be able to. It's well worth having a look at all of these options here. So let's then have a next part of our session is having a look at preparing a cash flow forecast. And this is all to do with dealing with money in and money out. You're not dealing with profit here. So you're looking at all literally the cash in and the cash out. So what you've got to do is include VAT. So all your money in has got to have VAT included. All your money out has to have VAT included as well. Have a look to make sure you include loan repayments and make sure the loan repayments are all in there. So you might have HP agreements, you might have other bank borrowing, put them all in there. Include your tax payments. So that might be corporation tax if you're a company, or it can be your self-assessment tax if you're sole trader or partnership. Make sure you include the VAT payments on a quarterly or occasionally a monthly basis. And then what you need to do is exclude depreciation and non-cash items. because they're not going to affect your cash at all. You'd expect to see depreciation within your profit and loss account, but not within your cash flow forecast. And if in doubt, ask us for help. We do plenty of cash flow forecasts for clients. We can set you up with a template. We can show you exactly how to do this. So if you've got any problems and how to do a cash flow forecast, please feel free to give us a shout and we'll help you out. This is a sample cash flow forecast. We've just produced this. These are just estimated numbers. We've done it just for a few months. We normally would do it for at least 12 months, but this is just so you can actually see it on screen. And these numbers are purely made up, so you can just slot in your own numbers. So for sales receipts, you might have 200,000 coming in November and so on. You can see all these numbers coming in month by month. You can put in, you might well know what you've got coming in over the next couple of months generally anyway. So feel free to put those figures in because you know exactly what they are. And then it becomes a little bit more speculative after that. You might have some orders, you're not sure how much they are, so you can put speculative sales in here as well. Much the same for the cost of sales that you've paid. Make sure you've got the right cost of sales figures in here as well, and then put in your speculative cost of sales paid as well. Have a look at then your total overheads, and then this will give you a net cash inflow or net cash outflow. Outflow is obviously the figures in red, and this will show you where you're actually spending more. So as you can see overall, yeah, we do pretty well here. But then let's have a look at the cash flow. You've got an opening balance of say 38,000 in the bank. Great, this all looks great. At the end of May, we've got 537,000 in the bank. Fantastic, you're thinking. But what if your borrowing threshold is 250,000? You can see here that in February, you're going to be going over to the tune of 393,000. So you've got a problem. So what you need to do is you actually need to have a look and see how you can address this problem. But the main advantage here of doing this cash flow forecast, because we'll be doing this in October time, is seeing that you've actually got a big hole here in February. So you're seeing 4 months in advance that you've got this hole sitting here, and it gives you the opportunity to be able to do something about it. So what can we do about it? Well, there's a number of opportunities here. Have a look at the cash sales, cost of sales paid. You can see we've got a big number here in February. Is it possible to speak to our suppliers and smooth out these creditor payments over the following months and get it down to a position where you're going to reduce that figure to below your borrowing threshold of say 250,000? Have a look as well, again, at how you're getting your sales money in. Is it possible to reduce the time that you're actually going to be collecting your debtors in? So you're reducing it down from say 60 days to 30 days. That will bring in some of the cash into an earlier month. So the whole effect of this will be smoothing this position out here at the closing balance level to a point where you don't exceed your borrowing requirements. The figure at the end of May, will be exactly the same. But it's then giving you the opportunity to say, well, actually, yeah, we can do something about it. We can see we've got a problem going forward, and therefore we can deal with that problem. Now here, looking at it, we've done this on a monthly basis. But if cash is really tight, it may well be that within a month, maybe within January, you've gone over your 250,000 threshold, and you brought it back down to the end of January to the 167,000 figure. So what you can do is you can actually convert this and make this a daily cash flow forecast. And all you need to do, instead of having the months across the top here, is having the days. You'll have November the 1st, 2nd, 3rd, 4th, and so on. And all you need to do is to slot in the information that relates to those days. So you'll know exactly which day your money is coming in. You'll know the days which your loan repayments are going out, the day where your wages are being paid, and you can actually have a daily cash flow forecast and keep this running balance here on a daily basis. And that will give you a lot tighter control, give you the opportunity to move your cash in and cash out on a regular basis. Always remember to include your VAT, corporation tax payments, loan repayments, dividends as well. We're not talked about. They're in addition to normal overhead costs that we'll normally see in your profit and loss account. All those need to be included in your cash flow forecast. Cash is king. Have a look at cost reduction. Have a look at saving all your costs as possible. Harts are part of an accountancy network of approximately 100 accountancy practices around the country, and a part of that network, we offer a cost reduction service. If you're interested in taking that up, please feel to give me a call or drop me an email, and we'll see how we can help you. But we can get the opportunity of buying your goods or buying your utilities in bulk and therefore reducing costs. It's well worth having a look at. If you do have spare cash, have a look at paying down your debt. Have a look at cheap debt, maybe replacing expensive debt with cheap debt. We'll look at bounce back loans and Sybil's loans in a minute. Claim everything that you can and defer everything you can. Everyone's making it as easy as possible for you out there, so you can actually defer loan repayments, defer mortgage repayments, defer HP repayments, lease payments, and so on. You have the opportunity to do that at the moment. HMRC giving the opportunity, I have given you that already, of deferring your VAT payments and deferring your self-assessment payments. And I'm sure they would look sympathetically if you wanted to defer your corporation tax payments or spread those payments out over a period of months. Much the same with your pay as you earn, maybe a little less so for that, but certainly with corporation tax, we are seeing that they are being quite sympathetic to those demands. Just be aware as well, so too deep a cut and you risk not being able to produce your product or service, which can therefore affect your ability for future funding as well. So if you've cut too deep, you're not going to be able to produce what you need to produce to supply demand. So make sure you just balance that to the right degree. Have a look at considering selling assets. So if you have a property in your business, is it possible maybe to sell that property and generate cash? You could do a sale and lease back transaction. So basically you sell the property, generate all the cash, and you draw up a lease for the next few years. Do you have surplus equipment which you're no longer using? Can you sell those assets and generate cash? And history has shown that companies with lower levels of debt tend to survive better during a recession. So looking at cash again, look at cheap debt. Bounce back loans, these are coming to an end on the 4th of November. So it's well worth getting your application in now. They're up to £50,000 or 25% of turnover, whichever is higher. There are 2.5% interest rates, and the government pays the first 12 months worth of interest. No repayments for the first 12 months, balance paid over 5 years, no personal guarantee, no early redemption penalties, and easy to apply, terms and conditions, etc. Basically, a lot of clients are taking up the opportunity to get these bounce back loans for varying amounts. Many of them have put the money on one side and have said, well, if I need it, I've got it. It's not costing me anything for 12 months. In 12 months' time, I'll have a far better idea of how my business is going, what the economy is doing, and so on. So they've got that money as a backup, as a fallback position. And if they don't need it, it can be repaid. If they do need it, they can actually use it for the benefit of the business. Also have a look at the Sybil's funding. That's coming to an end this month. Very similar to bounce back loans, but higher amounts can be lent. We think that the bounce back loans and the Sybil's loans, they may well extend these and give the opportunity to take them out over an extended period, but we're waiting to see what actually happens and whether the Chancellor announces that he will extend the application process. But here there's no personal guarantee up to £250,000 borrowed, but the application process is much more stringent. And it will involve you providing a business plan, a cash flow forecast, and a lot of other information as well. It can take weeks for the application form to be processed, and you've got to be able to make sure that you can afford then the debt repayments as well. So for instance, if you borrow £250,000, you don't pay anything back for the first 12 months, you then got to find £250,000 over 5 years, that's £50,000 a year, that's over £4,000 a month. Can your business afford to repay over £4,000 a month? So affordability becomes an issue. If you can afford it because you're going to generate far much more business, then yeah, that's fantastic. Then just go do that. The opportunity is there to be able to get these loans. We also offer our COVID support plan, so look at retaining as much cash as possible. So we'll look and consider all the grants that are available. We emailed out to all clients recently about some new grants that are available up to £5,000 for equipment or advice from professional people, including ourselves. You just need to apply to the Growth Hub, your local regional Growth Hub, whether you're in Manchester or you're in Cheshire, and there's opportunity there for some grant funding. If you want the details for that, please feel free to drop me an email, give me a call, and I can provide you with the link. We can have a go. We've had a look already. We mentioned already about loan holidays and borrowing. Pension planning. Is it possible for you to suspend the amount you're paying into your pension plan and keep that money on one side? Or if you need to use that cash that you're contributing to your pension plan, then at least you can put it on one side and you've got it for other issues as well. We've talked about property and utilities and whether you can cut your costs and save on utilities. Have a look at your own personal position and your own personal budgeting as well. Is it possible for you to reduce the amount of money you need to take from your business to be able to meet your regular living costs? So again, it's not just from a business point of view, it's a personal point of view as well. And you need to prioritize what is important to you right now. It's a very good question to ask yourself now as to what's important to you right at the moment. And make a list of what is important to you and see if that does affect your cash position. And then prepare an action plan based on that. With an action plan, get it written down so you can then follow it up or ask someone to follow it up with you. So we can offer you this COVID support plan. We can look at all these things with you. It's a 1-hour online session. Just book yourself in for it. So in summary, you just need to plan ahead to control and predict any cash flow shortage before it happens. We've seen that with our cash flow forecast and where the extra holes come. Understand where your cash gets stuck. We've looked at work in progress, stock holding. We've looked at debtor payments, creditor payments. Have a look at all those key performance indicators. Review your controls, your procedures and terms to gain timing efficiency. Is there any way you can improve the way you produce your goods and therefore reduce the time it takes to actually produce them? Cut out some of the red tape that you've got within your business so that you can then reduce the amount of time it takes to get your cash in. And have a cash flow forecast and make sure you keep reviewing it. It's all very well having a cash flow forecast and you don't review it. Have a look at it, whether it's monthly or quarterly or even daily. It's best bet to have a look at your cash flow and keep it going. Okay, so over the next few weeks, these are the next sessions that we've got in place. And we've got our marketing strategy coming up in a couple of weeks' time. Here we've got a guest speaker called Sue Fernandez from a company called Instilled. And she's an expert on how you can use social media to grow your business. Well worth having a look at. A couple of weeks after that, the end of this month, we've got a session on 10 killer ideas. And we'll probably throw in a couple of others extra for free, but it's all for free anyway. And then after that, we're looking at technology in your team. So we've got another guest speaker there on what other companies are doing in relation to technology over the past few months. And we'll look at staff issues and what can motivate your staff at this time. In November, we're looking at pricing and are you charging the right price for the goods? And then the last session is more of a discussion group. We've already enlisted the support of a couple of entrepreneurs to say how they've beaten the recession already, how they're growing their business over the last few months, or how they're actually dealing with the recession as it happens at the moment. So we have a number of very interesting sessions coming up, but thank you very much indeed for joining us today, and we look forward to seeing you on future sessions.